Hey traders, welcome to Charts and Coffee. Time to caffeinate and dominate. Happy Monday, everybody. Good to see you. Thanks for being here. All right, so for the next 20 minutes or so, we're going to take a look at what we have going on in this market. We have Jackson Hole Friday. We have the end of the month. We have, just sort of the preparation for the beginning of the fall trading season, probably the most illiquid month of the year here in August. Getting a little bit of a pullback. Now I say a little bit of a pullback, right? Think of a couple things here, gang. Uptrends, which the S&P futures that I'm looking at right now in the daily time frame, this particular market has been in an uptrend since, I'll tell you right now, looking for right there. So as long as I have the green dots down in here signaling both the bullish momentum and the bullish trend, I'm waiting for my pitch. I think a lot of folks confuse what we want to do with trends. This up in here is not ever where we want to get long, right? So it's not a matter of, well, it's pulling back. No, it's pulling back, because what we ultimately want to do is basically in that area right about there. This is where we want to start thinking about where the opportunity for the buy could be. It could be as soon as the 21 propulsion, which is sitting right about there. Could be all the way, frankly, down to the bottom line of the wave. What you see me sort of envelop here, really like that part of the zone, because that's where we have volume. That's where we have the wave. That's where we have the, as you can tell here, the 2022 point of control. There's a lot to like about this entire area right there. So this is what I'm looking at. And as we get closer and closer to Jackson Hole, yeah, we might get a little deeper into that pullback, which is terrific. This is what we wait for. This is the pitch over the plate that we wait for. So I think a lot of folks look at the pullback from the high. And I guess my point is, if anyone's positioned from a new high, that is a very vulnerable position. Pullback traders, swing traders, that's what I consider myself, buy the dip means we've got an uptrend and we've identified where that retracement, where that regression to the mean is waiting. So that's the best way that I can begin this week. That's the best way that I can begin probably every single session this week, which is I'm waiting for price to get down to that area. So picking the top that we're going to pull back from is not ever going to be a strategy that I will and have used for 30 years. What I want to do is, what's the path of least resistance? And when this thing, call it if you want, goes on sale, when it corrects, that's the opportunity, gang. That's what buy the dip means. And I hope that makes a lot of sense, because that's just not communicated enough in modern markets. All right. With that being said, and one of the things that's kind of a neat exercise, and it used to be sort of a joke. If you ever traded on the floor, it used to sort of be a joke, a little mean, but it was kind of funny. There was always that one trader on the floor who was just the inverse indicator, right? We all sort of knew to do the opposite of whoever this poor person was. What if we did that to ourselves? What if we did the opposite? Because, every now and then traders come to the really awful realization of, especially if they're down in their account, if I would have done essentially the opposite of what I did for whatever period of time, I could possibly be up in my account. That's actually a really good realization to think about, because what that gets you doing is thinking about the other side of the trade, which you always do want to think about. So if you're getting long at the top of the trend, ask yourself, what if I didn't? Or what if for a week or a month, I did just the opposite, or at least examined what the other side of the market is thinking about. All right. Now, that's not to confuse, but it's just to make sure that we don't fall into the trap that was spoken about in the epically awesome book that everybody should read called What I Learned Losing $1 Million. Moynihan and Paul. You can find it on Amazon. It went back into print. And one of the questions they posed to themselves is, and I ask myself all this all the time, Raghee, are you bullish because you're long, or are you long because you're bullish? And I think most of you know it's the latter that we want to be. All right. So let's get into the questions. And yes, I'm on the Trading View charts once again, but I'm happy to jump on over to the toss charts if a question arises. But I thought, let's do a couple sessions with these awesome Trading View charts. All right, let's jump into the questions. And first up, we know the 14-day trade mandatorium. I like that, mandatorium, before earnings. Right, so I don't want to engage a stock that is within the 2 weeks before earnings, because two things happen. One, implied volatility goes up, and two, the scales tip to those traders who like to collect premium, sell premium, as opposed to what I like to do, which is what I do, which is get long calls or get long puts. So because I'm a directional debit trader as opposed to a credit trader, I'm going to have a disadvantage inside those 2 weeks, for those of you wondering why. But if there was a good setup on the daily, would I enter in front of the Jackson Hole speech? Only if I thought I could get out before. Delta, only if I thought I could get out before. I don't want to be in that trade. The exception to that would be if I had at least one daily price movement range of cushion and I'd already scaled out. So I was already realizing a profit and scaled out of half my position, pay myself, reduce my risk, right? Then maybe I'd consider it. Okay. But only if I could be, if I thought there was a realistic shot of my being out. All right. Martha asks, do I typically day trade all year long? Yes. Yes. Or just summers, or just this particular market. Martha, I day trade all year long. I think in the Sector Secrets Mastery Room, the question is, Rog, once we go into the fall trading season, are we going to stop day trading in the morning? Oh, gosh, no. For the last 3 years, I've been doing a day trading class where pretty much the lesson has been, know the factors of the market, whether that be price, volume, volatility, time, and then use that to your advantage. My favorite time to trade is that hour and 5 minutes, right? 9:30 to 10:35 that I do with you all in the Sector Secrets Mastery Room, which, by the way, will be in there today. Summer just becomes that season where I'll say, look, there's not a whole heck of a lot else that I am going to do, and I'm going to focus on the day trading through, June, July, August. So it's a little bit more of a focus than it is only, my preference for the window of day trading. In fact, in a lot of ways, it wasn't until probably 2001 or 2002 that I didn't take summers off. I'd usually be pretty much checked out Memorial Day to Labor Day. So I'd say the first, almost 10 years of my trading career, I really didn't trade through summer. I'd take those almost 3 months off. So those are things to think about. Are the day trading hours come fall going to be even better? Oh gosh, yes. That's so. I day trade all year long. Absolutely, absolutely. Thanks for the question. And by the way, as far as this particular market, it just makes it even better to be trading in an environment where we had chop for so much, or even a little bit of the downtrend for so much of the summer. So it helps make that even clearer, quite frankly. All right. Okay, moving on to our next question. Marla asks, this is great for us to buy in a pullback. I'm with you, Raghee. here's the thing. We know that Jackson Hole is coming, so we knew that if there's going to be timing for the pullback, taking profit from what was a very nice run from mid-July through a lot of August made sense. The timing, I mean, think about the timing. We actually put in a minor high on August 16, which was last Tuesday. We confirmed the breakdown on the 17th, which was last Wednesday, right? So as we got closer and closer to Jackson Hole, and I'm sure there's a myriad of other reasons that we're pulling back mid-month. A lot of folks believe the last 2 weeks of August are even less liquid than the first 2 weeks of August. But whatever it is, I don't need to know when we pull back. I don't even need to know why we pull back, because the high is not as important. The resistance is not as important as ultimately where the support will be. Where do we land? Do we get inside candles? Do we get minor lows? Are we still in the wave? Do we have volume nearby? I mean, there's a lot we can absolutely look at and use in terms of understanding, where we land and why that may be important. Yeah, I'm with you there. So we just wait. We just wait. I'm not worried about quote unquote missing the move lower, because kind of going back to the earlier question about day trading that Martha had. Marla, so one of the things that we can do is, I don't feel the need to have to scramble into a short. I can just wake up, day trade till about 10:30, 11:30, call it a day, blank page, fresh eyes, flat, and I get to do it all over again. So as I like to remind myself, a day trader's best friend is the very next session. We get to do it all over again. So yeah, I'm with you. Can I talk about a fixed size trader, my 5% net for a trade, especially when the account is growing? So Avi, if your account is growing, the percentages take care of themselves. So, if you're in a $10,000 account, that's not the fixed stop necessarily, right? That's more along the lines of the maximum risk allowed. And, for day trading, I would be fine if certain traders cut that in half when they're first learning how to deal with the leverage of futures, or they're starting to amp up the number of QQQs or SPYs or whatever they're day trading, GLD, that they're trading. When the account is growing, the percentages will grow with you. That's why I don't believe in a Godzilla-sized account, large account, medium account, small account. There's no difference in the way that I trade an account with more zeros, right? And I've traded 4-digit accounts all the way up to 7+ digit accounts. There's no difference. I need better liquidity so I can get into more contracts at the larger account levels, but the approach and the scalability, right, is what we want to remember. I think a lot of traders start with maybe a 5-figure account, get to a 6-figure account, maybe a deep 6-figure account, right? And all of a sudden they think, well, I need to trade differently now. No, you just do more of what was working. So I'll say this, that's the same answer there. That percentage will adjust as your account grows or frankly contracts, right? I think the most important thing to keep in mind, and let me show you all this. I think the most important thing to keep in mind is this. And it's shocking to me, the number of traders that don't necessarily realize what their risk reward is. They don't necessarily realize what their risk is before they enter the trade. They get in, they might know where the target is. They kind of have a vague idea where the stop is. Maybe they've got those 3 down, which is already ahead of the game. But what they don't realize is this lower half of this image. And I have on my desktop to remind me. I think I was just sharing this with the Lorna bot over the weekend, saying, we really need to revisit understanding risk to reward, because a lot of traders trade upside down risk to reward. In other words, they risk more, and it's really reward to risk. We usually phrase it in reward to risk, even though we say risk to reward. This is reward to risk. How much are you risking to make a certain, hopefully, profit based on where your stop loss is and where your initial target is? So we don't want to have really ever habitually worse than a 1-to-1. because then we could be 50%, which is actually kind of low, but then we could be 50% on our win rate and for the most part be okay. Right. But it's really 1.5 to 1, 2 to 1. I can't say habitually I'm at a 3 to 1. Right. And I can't say that I am. But remember, the more upside down, the more you are risking to make a tiny little bit of reward, you have to have a high win rate. What if that win rate gets worse? What if you end up with a maybe that 25% of the losses come all at once? I've been there where it just seems we end up with a string of losses. And it's usually when the markets are transitioning from one market trend to another. It's inevitable. We've all run into periods of drawdown. That's when you will blow up your account. And I hear it all the time. People say, "Oh, I blew my account up," because you're relying on a very high, anybody who does this is relying on a very high win rate and a ridiculously unbalanced high risk to low reward approach. And I see it all the time. I just shake my head and I think, well, trauma teaches sometimes, right? And luckily I had a mentor who just hammered this into me. So I hope, and I've consequently never blown up an account. And I hope to be that for you all. I hope to be that person who just keeps talking about, gang, monitor risk, understand the risk, never have outsized risk, because blowing up an account is not a rite of passage for a trader. It's just a misunderstanding of the arithmetic around risk and position sizing. So, I hope that makes sense, Avi, to your question. Yeah, that's it. That's the game right there. That's the game right there. All right. Hey, DJK, what's the look back on the ES chart? Sure. If I'm looking at a daily time frame and I want to look at the point of control and maybe an anchored VWAP, so I want to use some volume-based tools, I like to look at the year, meaning January 1 to now. Sometimes I'll go back 12 months. So it would just be, in this case, August 22, 2021, right? So usually I like at some point to be looking at a 1 year look back on the volume profile or an anchored volume weighted average price or my V score the first of the year. So I hope that makes sense. And then because I use a variable, kind of a flexible volume profile, I could look at, since the last earnings release. I could look at it from the month. I can look at it from the year. I can go back 1 year. There's a lot more flexibility on that. All right. Next up, can we take a look at wire? Sure. Very, very choppy up until about 3 days ago. Be really careful here. Alicia, be really careful here. It's a very fresh trend, but it's been chopping for nearly the entirety of the year and almost going back a year. It's been very choppy. I know nothing about Encore Wire Corporation other than 1, 2, 3. This will be the 4th time we test this area. Just be really careful here. I can't say that I have a trade setting up right now, but it has transitioned to a bit of an uptrend. Okay. Next up, AZN. I want to buy the dip on AZN. No, I cannot yet. It is not double green, although it is above the 200, but not quite yet. And I don't typically like to play pharma and things like that. And then on Johnson & Johnson, yes, we are going into ex-dividend date, so I do expect a little bit of strength and then weakness after double red. I'm with you there. That looks like a good sell to rip. Just keep in mind, however, that XLV is starting to show a little bit of strength. UNH is already in an uptrend. So remember where Johnson & Johnson is as an individual boat, a big one, definitely a big boat, but an individual boat within the tide of the XLV with another big boat, UNH, moving higher. So be careful on that one. Just be careful on that one is what I would say. All right. All right, gang, just like that. I am out of time. In terms of, again, looking at the overall look at this market, remember that the NASDAQ is pulling back. It's at the 21. Am I in any rush to buy these dips? I am absolutely not. That's where having different gears, both short and long, help a lot. And by the way, if you want to day trade with me every morning, come check out what we're doing over in the Sector Secrets Mastery Room, sectorsecrets.com. All right, gang, have a great one. I'll see you tomorrow. Same time, same station. Be good to each other.